Okay, g'day, Rudy here. So this video is all about uranium. Another one of the weekend's vids about commodities. So lovely rounded bottom. So this is the spot price, the rounded bottom, the declining wedge and breakout. But for those who don't know, the case for uranium. So there's a few drivers here. So we've got demand for clean energy, because solar and windmills won't do the job, especially with AI. AI is just electricity hungry, and nuclear is the only real long-term solution. In the meantime, coal and natural gas will do the mix. But to actually get uranium in, to use it, there's a lot of countries that use it now to generate electricity. But once you buy the uranium, then they've got to sit in a process for a couple of years before you can use it in electricity. So everyone says, "Oh, the reactors are 5 years away," but anyway, you're getting the point. Basically, the World Nuclear Association is just saying demand forecast is going bananas. So Kazakhstan is the world's largest, produces 50% of it. There's some mines that are trying to get up and running, but they're not getting approved for whatever environmental or whatever reason. There's been a decade of just no investment, and they reckon they need new mines needed 6 to 8 large-scale projects of 60 to 80 million pounds annually by 2035. And Kazakhstan, that's the uranium producer, is 30 mil. So you need basically 16 Kazas every year. So at the moment, long term, because most of the uranium is bought, like I said, in advance from these utility companies, paying around $80 a tonne, and they sort of go to the spot price to fill up the bucket from shortfalls. But they all need to plan ahead, and they buy years ahead. And there's a bit of a deficit coming down the line, because you've got to look 5 years ahead for all this stuff. So they reckon by next year it'll be $90 to $100, and then up to $150 to $200 long term. So it's getting before the companies buying uranium sort of had the upper hand, but now that all these countries are going nuclear, except for our stupid country, the people with the mines are getting a bit of pricing power back, and so that's starting to flow through, and it will so it's not going to go like a rocket like the silver price. But technically, this is the spot price. It's looking beautiful. Okay, so how do we get exposure? So this is the URNM in America, which is sort of the same as, well, it's basically the same as a URNM here. But you can see this is Friday, so this will follow through probably to our one on Monday, but that looks like that's ready. It's ready to rip. Been consolidating since June 25. So this is our URNM. So you can see we've had a few. I've had a few goes in this, telling you when it comes down to the box to buy it. So no one can say they've had no warning on this one, if you're a long-term subscriber. So that's Well, there's two ETFs exposed. That's one of them. And so sitting in this one is Cameco. So this is the biggest holding. So this is the mother of uranium companies, because they're the second largest uranium producer, but they bought Westinghouse, and Westinghouse, the king of making the actual nuclear reactors. They went bankrupt trying to do it, and now they got their act together. But you can see Cameco's got that lovely rounded bottom that I love, with a nice broadening wedge breakout, come down, did a little test. You can see this pin bar here went down, back up, so it's sort of saying I deserve to be back up there. Kazatomprom, so they're the world's largest producer. So Cameco, hopefully I said it right. I got picked up by a subscriber. I hope I said it right. Cameco. Okay. Sidetrack. All right. So they've broken out of this declining channel here, consolidating. It's going to have a crack at the resistance there for sure. You got the Sprott Uranium Trust. So this is just someone holding the actual physical uranium in a trust, an ETF. Energy Fuels. So this is sort of America's uranium producer. So everyone's trying to tee them up to supply uranium, but demand's becoming. I mean, all these tech companies are trying to sign up, secure production, but that's gonna shoot through next week. Also in there is one of ours, Deep Yellow. It's in the ETF, so they got a project potentially starting 2027, my notes say. So rounded bottom at support, so they all look good. The other ETF is this Atom, which has Cameco as the big holding, a quarter of it, but it's focused a bit more on the actual companies that make the reactors. So if we look underneath the hood, so you got this SMR, so they're in the business of trying to build these small nuclear reactors. So it's, as I thought, it would come down to support. Nice little big pin bar here. So that looks like it's going to make its way back up. And Oklo, they're in the same business, making nuclear reactors. Had your bearish wedge there, which broken, but it came down here and said no. So I don't think it's going to be bearish. Okay, so this is URNM over Atom. So Atom's been outperforming URNM. So take your pick. I mean, if you want exposure to just the miners, then URNM, and if you want exposure to some of the more tilted towards those reactor companies, you go Atom. But URNM would be my pick. But then my better pick would be this URNJ, which you can get in. You need access to the American, buy it in America. So you got in here. So you got Paladin. You got a whole bunch of uranium mining companies, junior ones, not the big ones. So mid-tier uranium producers, and that just looks that's just gonna rip. That one, that's gonna rip. So this is URNJ over the URNM ETF we have here. So that's going to rip. So URNJ is going to outperform URNM. Paladin. We've got a few cracks at here too, down this support level. So if everything else is going up, there's no reason why Paladin shouldn't. So in this ETF2 is this next gen energy. So they got a special way of mining uranium, sitting on support, so it looks ready to go. Uranium energy. So they're obviously another uranium miner. Nice rounded bottom. So that's not going to fall out of bed. Denison, the largest undeveloped uranium project in Canada. So they've all had this big pin bar, this bullish pin bar, they call it, down and up. You'll see that. Okay. And then also in there is our friend Boss, and this is a good example of why ETFs are good. Because if you just had loaded up on Boss, you wouldn't be a happy person right now. But if you bought the URNM or URNNJ, you'd be laughing, because you just don't get ETFs gap down like this. So anyway, if we go to an hourly chart on Boss, because I know there's some people. So that's now, yeah, I mean, they had issues with their mix, their uranium grades and mix, and how you mix it together, but they're smart people, they'll work it out. So they're actually a more efficient miner than Paladin. So my preference is obviously that just buy the ETF, but there's people I know that want to buy the stocks. And a subscriber said, why don't you talk about Lotus? Okay. So it's got a beautiful wedge going on here at support. They got a good project, past producing mine, production a few years away, but good resource. So Lotus resource. I reckon these, if anyone else has got some good companies that you want to put in here, and because I think they'll be bid up over the next year or so. People trying to secure uranium for the next 10, 20, 30, 40, 50 years. So, alright, well that's a wrap on uranium. And all these, in the bigger scheme of things, still got the king, MVR. But all these little ones are a nice little attachment to them. Because they helped, because the king MVR doesn't have doesn't have any uranium exposure. So, alright, let me know your thoughts. See ya.